Good morning, I'm Catherine Ross and I'm joined by Jim Cramer. We're joining you via Skype this morning in our efforts to do our part of social distancing. Jim, I want to start with what's top of mind for you this morning.
Well, top of mind is the safe and sound bond that I want, the SAS bond. 500 billion of it is going to go to healthcare and to making it so that we have everything we need and everybody gets equal healthcare, no state better than the other. And then 500 billion of it goes to the economy, getting people to have enough money to stay at home. Because if we had 1 month where we stayed at home, we conquered this thing, and then we could all go back to work, because in 1 month, we have developed all the testing that is needed, so we will know whether we're sick or not, and we can go out if we have the antibodies and restart the economy. It's a quicker way to do it. A 30-day hiatus to the economy where your rent is tacked on at the end of your lease, or your mortgage payment is tacked on at the end of your mortgage. And that way, we would be able to be sure that everybody who comes to work is healthy, and we can eradicate COVID, which is what we have to do. We can't put it on the bench. We have to eradicate.
Let's take a look at the markets. We're seeing a rally in the major indices this morning. Do you think that the market is thinking more long-term as opposed to short-term because they know that we will one day eradicate coronavirus?
No, the opposite. The opposite. I think that the market is reacting to the fact that things didn't get worse over the weekend. They got a little better. And what you see is people just constantly trading off of death numbers and ventilator numbers and numbers involving peak and the curve. And I think that's a shame. It'll let you down. It'll let you down because there'll be a spike number that makes it so that you got it wrong, or there'll be a number which makes it indicate that perhaps you were premature. So, I mean, this is a good example for what we're doing with Action Alerts, which is we're raising money. You know, we were bold enough to put money to work when the market was bad, but now we have to raise money because the market's good. And I think a lot of people who buy stuff right here will end up buying something that does not hold up. So this is a time, if you follow your bulletins, to do some selling, not to do some buying.
And we'll be going live over on Action Alerts Plus right after this.
What did you
Jim,
think of my
based on what you just said, what?
What did you think of my bond idea? Larry Kudlow really liked it.
I think it's an interesting idea. I think that you're right in that we need to do something to help the economy. You know, watching one of your earlier interviews this morning about where the interviewee said that he believes that 30% of businesses will possibly be eradicated by the end of this just because of the way the economy has shut everything down so quickly. I think that really brings up a good point of how can we help the small businesses? How can we help the millions that are unemployed? And we're just going to see these staggering numbers continue to build. So I like your idea of let's try to plug this hole in whatever way we can, and kind of we need to experiment, in my opinion, to see what works best.
We're putting money in people's pockets, which I think is really great.
Yes.
We're helping the small, medium-sized business, which is really great. But I think that all of us who have small, medium-sized businesses are assessing the idea of whether to continue with it. Now, if you have money, you might be able to continue it. If you don't, maybe you don't get any break in your lease. Maybe the Costco and Lowe's and Home Depot and Walmart take it to you. Maybe Amazon has replaced you in a lot of ways. Maybe people stop coming to the mall because, as Howard Schultz was talking about, but he likes obviously Starbucks, but JP Morgan was coming out and saying maybe your pattern changes. So I think that what happens is that they're going to give the money away. I think it's going to be very good. I like the program. SBA kind of a little bit behind the curve, but that's all right. They'll ramp up. But even though I like it, I do think, like you said, we have to worry very much about people who are not going to make it. As we don't want to disenfranchise millions of people. We don't want what happened in the 30s where we had to create programs for people to work. I'd rather just put people in their homes and pay them to stay in their homes while we develop testing. I think we're spending too much time talking about ventilators, and we're not spending enough time talking about testing.
I think that's an interesting point. I think one thing that I would like to see more of is just all across the board, more discussions on ventilators, because I know you and I have a lot of questions on ventilators. We've got a lot of questions on antivirals. We got a lot of questions on testing. Across the board, I'd love to see more answers to those questions. And also, let's talk about for a minute this $1,200 paycheck that Americans are getting. That's great. But let's break that down for a week. That's not very much for many Americans who are out of employment for months.
Well, you mentioned at the top of the program, is the market up because of longer term or shorter term? And I said it's not longer term. And the reason I said that is because that money that you got isn't going to get you through this period. We need everybody to stay at home. It's funny. We are so exciting that it looks like the curve is bent. You want to shut the curve down. Then you do what they did in Madrid in the end after being wrong, which is that an enforced lockup. But what Madrid did wrong post that is they're not putting money in people's pockets so that, they're not, you need people who are missing work. Okay. They're missing work. You got to give them money. The reason why is because they're missing work because the government has shut their business down. It's like a business interruption determined by the government. But I like to have my 2 restaurants open. Absolutely. But I know if it's unsafe, I certainly don't want it. I don't want to get people sick. But what we have to do is we absolutely have to be able to say, you know what, it is time for the government to be able to make it so that it's a little more realistic with how much money it has to give people. And I completely agree with you that it's just not enough. Sadly, but it's not enough.
Let's focus back on this market for a minute because we're seeing the Dow up about 1,000 points right now. But to be frank, the next 7 to 10 days are going to be painful for many Americans looking at these coronavirus numbers. Is the market not counting that into this rally today?
Yeah, I think you're very right, Catherine. I think that if we listen to what the president, who is an optimist, says, and we listen to the Surgeon General. I watched the Surgeon General yesterday on Meet the Press. I mean, he's telling us, look, this is going to be a terrible time. Now, I mean, maybe he's under-promising and we over-deliver, but Catherine, I found what he said breathtaking. And this is day one, a day one rally when we end up giving up, when we start getting really bad numbers, is not a good idea. And I think that, Catherine, what a lot of people have to do is say, you know what, I'm going to take some profits here, or I'm even going to take some losses because I listened to the Surgeon General and he said this is going to be a bad week. Now, again, maybe it's not. And the president wants the hydroxychloroquine, and that's terrific. But, right now you can't get it because it's reserved for people who really need it. But I just wonder whether this isn't one of those days where you say, wow, I had a chance to sell something. Maybe they come back again and buy it tomorrow. But, maybe I had a chance to sell Caterpillar at 120 before there was no infrastructure bill. Or, maybe I had a chance to sell that Raytheon. That was a nice pop when it started trading. And maybe this was another chance to get out of Macy's above 5. But I don't want to be as emboldened as buyers coming in right now. It doesn't make sense to me.
You had the opportunity to discuss your bonds plan with Larry Kudlow this morning, but I'm wondering, let's take that a step higher. If you could talk to President Trump for 5 minutes in the next week, what would you say to him?
We need to have people safe and sound. We need to tap the bond market in the way that he has said, which is that the rates are really low. We need to have the equivalent of a March of Dimes, which is how we conquered polio. That was individual. This is too big. And that he ought to take advantage of the fact that so many people are united about fighting this war and would do anything they can to be able to fund it. And they would get a good rate. The government could give them a very good rate on it. And there's really, what's the downside? Well, they're going to issue 30-year paper anyway. So, I mean, why not earmark it? Why not go to Congress and earmark this for $500 billion for safety and $500 billion for soundness, SAS bond? And the only reason why you wouldn't do it is because you really hated each other, Democrats and Republicans, and that would be really a shame. There does seem to be, as my friend Matt Horween says, some sort of like resistance by Treasury to a 30-year that makes very little sense. And this is the time to do it. Challenge the American people. Challenge them. Say, hey, listen, American people, we have heard that you want to help. We know that you want to beat COVID. Here's your chance. Let's have war bonds. It's worked in previous wars. This is a war, and you can get some of the army with you and say, listen, we want some of that money for the combat surgical hospitals, where they can help 250 people at a pop, and they have the medical people to handle it. So, Catherine, it is really time to raise that money so that you and I don't feel like there's nothing out there if something goes wrong.
I got an interesting question emailed into me from a viewer, Tim, this weekend that I want to pose to you. Now, Tim's worried about the deficit of over $20 trillion with this $2 trillion stimulus package. He's worried about the dollar specifically. So how does the U.S. economy recover from this in the long term?
It's a great question. I know that Larry was asked that by David Faber, and I think the answer is we're in a deep disinflationary moment. So if they have to, they'll be able to buy back those bonds cheaply. They might be able to actually do that. They can offer a tender offer. There's no reason why they can't do that. So I think that the government is understanding that you got to do everything you can to keep the deflation from striking hard. Deflation is very bad. We've had it for a while, but this could lead to radical deflation. So I'm not as concerned about the risk.
Jim, thanks for taking the time to join us today. Guys, thanks for tuning in. We are now heading over to our Action Alerts Plus Daily Rundown show live over on actionalertsplus.com. Come join us there. And remember, please keep sending in your Twitter questions at by Catherine Ross and at TheStreet. We are looking to answer them all. Thanks for joining today. I'm Catherine Ross, and we will see you tomorrow.